I think we're coming to a time where we have to be very honest about the situation we're in and what the future looks like. So I would ask you, if the Fed and the Treasury, not only our Fed and our Treasury, but around the world, had not stepped forward and, in our case, pumped $3 trillion into the economy and supported the stock markets and held interest rates down, would we be in the situation we are in, or would we have a few stocks that benefited from the pandemic at extreme highs as their businesses grew, and everybody else would be worth nothing? Is that a fair assessment? We know that if consumer spending had gone down to nothing, or at least to low wage earners who were out of work, had no money in their pockets, couldn't pay their bills, we know there would have been a lot more failures. So we're at a point now where we honestly thought back in March that we'd have this pandemic under control, but it isn't. In fact, because of some bad decisions of opening the universities back up, telling that segment of the population everything's okay, you can go back to school. And what happened? They went out the first Friday night and they partied. And then they showed up Saturday night. And then now they're being able to watch their football games. Now, they can't go to the stadium maybe, but do you think they're going to be in their fraternity and their sorority houses, and they're going to be in the yards? And we've made some very bad decisions. So relative to the pandemic, we aren't any further along in getting this thing cured by human quarantining than we were in March. Yeah, some of us are wearing masks everywhere we go, but there's a large part of the population who still thinks this is a fraud. We have to put credit where credit is due, and that is that Steve Mnuchin and Powell bailed us out, okay? At least here in the United States. So, interestingly enough, today, Tuesday, they're in front of Congress as we speak, speaking to this subject. I looked at their script for what they're going to say today, and basically saying there's been some improvements, but the future's highly uncertain. They're basically counting on the vaccine, and then they're counting on you taking the vaccine, and then they're counting on we get enough of the herd immune that we can bring it under control. And everybody is saying that isn't going to happen until, at the best, June of 2021. So I, as an investor, what am I going to do? Well, they go on to say we need some more spending relief programs, but that isn't happening. Congress isn't going to do that because the Democrats feel if they give another relief program, that'll help Trump. And the Republicans feel that if they give the full amount, that'll hurt their financial position, their financial conservative position with the people who believe that this is a hoax. Now, Mnuchin and Powell are also going to say that there's 22 million jobs that have been lost as a result of this, but we know where those jobs are. They're the low-wage jobs. So here again, we have a separation of those who have and those who don't have. And those who don't have are in trouble. Now, they're spreading their trouble because we've now said that they can't be foreclosed on, but that's assuming that they have the ability to qualify for those programs, that they understand it, that they have the education to go online and figure out how to say and qualify for the bank who's trying to foreclose on them, saying, no, you have to give me forbearance. That's not a fair assumption. So those who don't have are going to have even less. We're not going to have, as I said, a full recovery until 21. Now, what about the Main Street program that was supposed to help small businesses that would have employed some of these people? That was a $600 million program. Guess what? 2 million of it has gone out. Let me say that again. That was a $600 million program. 2 million of it has made it to the people on the street. Why is that? Because the rules were so complicated, and the banks looked at it and said, yeah, well, you're leaving me hanging out here if they can't pay us back. And so the banks aren't putting that 600 million out. So that part hasn't worked. So what we're coming back to is, as an investor, what should I be doing? Well, let's look a little bit deeper. The next stimulus package probably isn't going to happen. Neither party wants it to happen. They have their focus on other things. We're engaging in a new war. It's the Cold War is heating up between China and us, and really everybody else. We don't know what's going to happen with TikTok. We don't know what's going to happen with WeChat. China's even threatened to shut down Apple in China. We're entering a Cold War. So we have another reason to be skeptical of what's going to happen with our stock market. The pandemic continues to grow. Spain had it under control. It's now out of control. Europe has basically said we need to initiate a Marshall Plan, and that is where the government takes over and says you can or you can't, shut down or open, walks right down the streets and says this is what you're going to do because you're not following the rules. There's rumors, if you read this yesterday's Wall Street Journal, the banks are getting into failure territory in Europe. And so in many countries, they're trying to pair up the banks to keep them alive by basically bringing their assets together and through layoffs and cutbacks, keeping the merged bank together. Is that going to happen in the U.S.? Yeah, I suspect it will. This is one of the canaries in the coal mine. The banks are on soft ground. They're on the ice, let's put it that way, in Europe. Now we have then, most recently, the death of Ruth Bader Ginsburg. So now we have a new fight within the government, and the government is rallying both sides of the aisle to make sure that the Republicans don't get to put the new Supreme Court justice in, while they aren't too interested in putting together a relief package for you and I. So that doesn't look like things are under control. The November elections is doing nothing more than dividing this country even further. Again, go to yesterday's Wall Street Journal and see how our country is divided. It is divided by education. It is divided by race, whether you're male or female, whether you're gay or you're straight. It is just broken down into sectors that we're becoming a more divided country as a result of this election. Borrowing on margin is at an all-time high, as is every other element of debt. Our country is in a debt crisis, and that debt crisis is going to hit the pension plans of the states right in the nose. That is going to be, once they get their employees back and once they get their taxes up, they still aren't going to be able to pay the retiring baby boomers their pensions. Bank cash deposits are at an all-time high. Now, why would that be? That's because the bank doesn't want to lend the money out at the rate that is being dictated to them by the zero interest rates or the 0.67 interest rates on a 10-year bond. So banks are flush with cash because they can't get a fair interest rate on loaning them. So loans have come down, the availability of loans, unless you have some outrageous fees attached to them that make them attractive to the banks. So when you see that, when the banks aren't lending, that's going to put a squeeze on home buying. It's going to put a squeeze on startup companies and small companies being able to borrow from the bank unless they borrow at an outrageous rate. So that's another reason for slowdown. So that comes back to, why did I go to 50% cash? I think I just gave you what I count as 9 reasons. I just have never seen, well, I have. I did see a scene. I went to cash, 100% cash, last July. And that was, I was watching on a daily basis the U.S. debt clock, and I said, this just can't continue. Something is going to happen to make this bubble burst. Well, something did happen. It wasn't what I thought was going to happen, but something did happen, and the bubble burst, and I went wholehearted 100% in the end of March. And that's why I'm flush. I'm up substantially. And that's why I'm comfortable hedging my bet, taking some of the money off the table just to see what's going to happen. And I can't imagine how we're going to get through this till next June, when they're projecting that the virus will be under control. I can't imagine how the stock market can survive that. I just can't. And we're beginning to see a pullback from tech because those levels got out of control. I've shown you in past videos, and particularly the video I showed, how low will it go, exactly where I want to buy in. And I want to buy into the same stocks that my other 50% and that I'm fully invested in, the 7 stocks that I own. And they are the big 6 plus Tesla. Tesla is my largest holding. If you've watched my last 2 videos, I believe Tesla is probably going to change the world so drastically that it may outpace Apple and Amazon. I mean, they have found the golden goose, that they are going to revolutionize the energy industry. They are going to, the autonomous automobiles, they're the only ones with the data. They're the only ones with the software. This just hit me in the face that this company has so far ahead of everybody else that's in that space. And he has openly said that he can't get enough batteries from Panasonic and his other suppliers, so he's going to go into the battery business. And do I think he'll be able to raise the money to do it? Yeah. Once everybody figures out what's going on. And I know, someone saying, well, Volkswagen's got its own battery. Yeah, but he's got his battery down to where it's at $156, heading for $100 of kilowatt hour, and everybody else is up around $256 or higher. So this man has got, I won't say it, he's got them by the short hairs. And I just praise Homer, who several months ago shamed me into getting into Tesla. And Homer, I'm so thankful you did. So I'm a part of bestofusinvestors.com. I got a letter today in my email from, I believe it was Andrew, who gave me an explanation as to, that I 50% understood, as to why NVIDIA is going to rapidly take over this chip market. I published that letter in my newsletter this morning. My newsletter is something I send out to my tribe members. We're a group of, right now, just past 51,000 who collectively share information. It's like Andrew educated me on NVIDIA. Now, has anybody else been able to explain NVIDIA to me? No. But Andrew did. And he's a member of our tribe. And he meets in our village. And our village is our Discord. And if you'll sign up for Best of Us Advisors at this address here, I'll send you my morning letter for nothing. And in that letter, you'll get a ticket or a link to the Discord. In the Discord, we exchange more information like that. We hold classes on qualified and non-qualified retirement investments, on things like estate planning and options trading. Again, this YouTube channel, unlike many, is not all about me. I'm just the guy who is the guy who makes some of the other things possible. What I'm trying to do is make the knowledge that I have, that I acquired as a professional financial advisor, available to everybody, because I think I have an advantage. I know how to set up a retirement program. I know how to set up my estate planning. I know how to set up an LLC so that my car is a write-off for part of my business. That's how you make wealth. It's not how you make money. It's how you make wealth. And then it's how you pass that wealth on to other folks. Most of you don't know this because you can't afford an expensive financial advisor who requires you to give him $500,000 to manage, or he won't talk to you. Well, I'll talk to you, and my tribe will talk to you, and you'll see information from guys who work in the oil fields in Saudi Arabia and tell you what the future of the oil industry is, and hear this guy telling me what the future of the chip industry is. I can't get that anyplace else, but I'm willing to share it with you. Best of Us investors, join our tribe. This is a fun place to be.